The US stock market appears to be following the pattern of previous bubbles, leaving it poised for a monumental crash, Barry noted in a May 8th tweet. You may ask, what has he seen that others haven't? Well, you should listen carefully till the end. Don't skip, because we'll delve into Barry's latest warnings, so that you can understand what he's trying to say before it's too late. Do you ever wonder what goes on behind the closed doors of the financial industry? Michael Barry certainly does. In a since-deleted tweet on March 12th, the renowned investor who accurately predicted the 2008 financial crisis sounded the alarm on the present state of banking and the broader financial industry, expressing his concerns with a sense of urgency. The investor criticized the leaders of Silicon Valley Bank, SVB, for their reckless and lack of foresight. He's been sounding the alarm for years about the lack of transparency and accountability in the world of finance, from the dot-com bubble in 2000 to the housing crisis of 2008. And now, in 2023, Barry sees a pattern of individuals taking foolish risks in pursuit of profit. And when these failures occur, Barry noted that governments will often resort to printing more money, a tactic that he believes has been overused because it works well. As concerns about the global market grow, Barry's warning serves as a reminder that reckless behavior can have disastrous consequences in the long run. In addition to his warning about the recklessness of Silicon Valley Bank, the esteemed investor has recently drawn comparisons between the Bank of Enron and the energy trading behemoth that notoriously went bankrupt in 2001 due to accounting fraud. Barry's explicit warnings about the potential risks and pitfalls of the financial industry have spurred discussions about the need for increased transparency and accountability in the sector. His insights have underscored the importance of sound financial practices, ethical leadership, and rigorous oversight to prevent future crises. Not just that, the investor has been sounding the alarm about the state of the economy and the stock market for several years. He has warned of the potential for the greatest speculative bubble of all time, cautioning individual investors against buying into meme stocks and cryptocurrencies that could trigger the mother of all crashes. With so much uncertainty and volatility in the markets, it's hard to know what the future holds. But one thing is clear, Michael Barry is not afraid to speak his mind, and his warnings about the dangers of speculative behavior and the lack of transparency and accountability in the financial industry should be taken seriously due to his reputation of accurate economic predictions. Listen to this. Undoubtedly, Barry is a man that has built his reputation based on sound financial judgments, and Barry's alarm bells have been ringing loud and clear within the financial community, capturing the attention of many astute investors who have taken heed of his advice and shifted their investment strategies accordingly. As his message reverberates across the markets, it's clear that his words are not falling on deaf ears. Despite this, some investors have continued to indulge in speculative behavior, leading some to question whether the markets are headed for a reckoning. While there are those who remain optimistic, dismissing Barry's warnings as mere fear-mongering and overreaction to recent uptick in inflation. However, the events of 2022 have demonstrated the fragility of the financial system, with the US regulator approving a more stringent monetary policy that choked off investment risk and sent prices tumbling in both the stock and cryptocurrency markets. Looking ahead, Barry's outlook remains as bleak as ever, as he predicts a further round of inflation and a recession for the US economy in 2023. His warning comes as no surprise to those who are familiar with the accurate forecasting, which has earned him a well-deserved reputation for spotting market trends before they happen. Barry's prediction for the future is grim, and his insights into the cyclical nature of inflation and recession leave little room for optimism. He believes that although inflation may have peaked for now, the cycle is far from over, and a potential negative CPI in the second quarter of 2023 could usher in a new round of inflation spikes. The feds may be forced to cut and the government to stimulate, but the inevitable downturn could be unavoidable. It's a dire prognosis, but one that investors ignore at their peril. As of November 2022, Barry took to Twitter to declare that gold would rise to the occasion, citing the numerous scandals and bankruptcies that had rocked the crypto industry. According to Barry, the 2022 market correction was largely a result of the negative fallout from these scandals, which had left many investors reeling after losing vast sums of money. He warned that these scandals were likely to spread like a contagion, eroding confidence in the crypto market and making it less attractive to investors. Barry was quick to highlight some of the most high-profile scandals that had hit the sector, including the collapse of the FTX market exchange, the Terra Luna ecosystem crash, and the bankruptcy filing of the Celsius network. Despite the market correction in the cryptocurrency sector, gold managed to hold its own and performed well in the midst of an uncertain macroeconomic environment. Barry doubled down on his prediction, warning that the mother of all crashes for both stocks and cryptocurrencies was looming on the horizon, and that it would likely spread to Main Street. Drawing on his extensive knowledge of market history, Barry also cautioned that when crypto falls from trillions or meme stocks fall from tens of billions, the losses incurred by Main Street would be akin to that of a small country. His insights offer a sobering reminder of the risks that investors face in these turbulent times, and the importance of being prepared for any eventuality. As of 2019, the world-renowned investor Michael Barry sounded the alarm about the dangers of cryptocurrency. He highlighted leverage as a significant problem in the industry and urged investors to understand its implications before engaging in crypto trading. Little did he know that his predictions would come to pass in 2022. The stock market and cryptocurrency market showed a high correlation, with significant capital outflow. As a result, the cryptocurrency market lost almost $2 trillion in capitalization. Barry's prediction that gold would rise due to the cryptocurrency sector scandals also came to fruition. Investors' interest in cryptocurrencies remained suppressed, and gold performed impressively as the crypto space battled ongoing regulatory strikes. However, the financial sector faced a series of bank runs, and cryptocurrencies rallied as bailouts set in. Many people are gaining more confidence in crypto despite the predictions Barry made last time regarding the industry. The future of Barry's predictions is still unknown, but one thing is certain: his warnings serve as a cautionary tale for us all. Barry's notorious reputation is not without merit. His warnings about the dangers of reckless behavior in the financial sector have been proven right time and time again, as history has shown us. Such behavior can lead to disastrous consequences for individuals and the economy as a whole. So, what do you think of Michael Barry's predictions? Let's know your thoughts in the comments. Thanks for watching, and I'll see you in the next video.